Hello everyone, welcome to the Analyst classroom. In the last video, we have discussed about the direct and indirect method of the cash flow statement, and I have given the explanation and the example of the direct method. But I forgot to give the example of the indirect methods. So let's start the part 2 with the indirect method example. So as we have discussed in the first method, that the first method is the transaction wise cash flow statement is prepared on the direct method. So in the indirect method, what the analysts do is they take the net profit on the uh, indirect method, and then they deduct and include some part of the transaction. So let's give you the brief summary. Net profit plus non-cash charges minus non-cash payment plus these charges and the movement of the current asset and liabilities. So we have discussed this in the first part. So if you have not watched, please watch that. I will put that video in the end screen of this video. So this is the indirect method example. So here is our 62 lakhs of profit comes from the income statement of this example. Then we add the depreciation 3. As here discussed, non-cash charges should be added because this depreciation is not cash charges. So we need to add this to get the real cash plus outstanding salary, because here we have mentioned the salary, deducted the salary expense of the 10 lakhs, but not all these 10 lakhs we have cash paid. Outstanding is 20k, so we have added back the 20. Then overall sale is 80, but our total sale is not in cash. It is 50% cash and 50% credit. So our increase in current asset, if my current asset is increased, my I need to deduct because I have not received the cash. It's in the AR receivable 40. So I have added subtracted 40 from this profit, and I got the 25.2 as a CFO cash flow from operation, as we have get that in the direct method also. Then the comes to the CFI, cash flow from investing. So cash flow from investing, we deduct the increase in the fixed assets. Asset increase, we need to deduct from the cash flow. So our fixed asset, land and building, we have purchased 20 and 15. So we have 35 of cash outflow CFI and 40 increase in the liability. If our liability increase, I have received the cash or not paid the cash. So 40 is my cash flow from financing. 40 is I have raised the capital and the bank loan. So it increased my cash flow from financing, and net cash flow is my 30.2, as here is matched with the direct method. So this is the indirect method of the cash flow statement, example of the indirect method. So let's move to the another topic, and here we are gonna discuss that how CFA examiner asks you the question about the cash flow statement calculation in the exam. So this is the example, and we need to find the cash sales, cash paid to the AR, cash paid to the AP, and cash purchase. And we gonna find via this inverted Y. I will explain the inverted Y. So here is the first part, opening, and how is this opening will increase. We need to add, for example, opening inventory will increase by total purchase, opening payable will increase by credit purchase, and opening AR will increase by credit sales, and these two combines gives our the total of X, and this X is divided by 2, COGS and closing. Here X is divided by V paid the cash or cash purchase. We uh, we have purchased by cash or closing AP, and this cash received from the AR and closing AR. And let's discuss these also. Then I will start the example. So as I have mentioned, to find the cash sales, cash received from AR, cash paid to AP, and cash purchase. But CFA might ask like this, that find the cash received from the customer. Cash received from the customer means cash sales plus cash received as AR. You need to combine these both answers and give to the customers. And same as cash paid to the supplier, cash purchase plus cash paid for the AP, accounts payable. And this includes, these both combined goes to the cash paid to suppliers. So let's put the numbers and solve the question. So first is the opening inventory 15 lakhs. So 15 my opening inventory, total purchase. Mm, Cox Cox is 12. So my Cox will be 12. My closing inventory is mentioned. Closing inventory is 18. Closing inventory is 18. So as I have explained in the first part, that this plus this makes this x. So x will be 30, and if we know that 30, then we could get this middle part of this equation. So 15 and 12, this is should be 15. Okay. Then move to the AP. AP means opening payable is 5, closing is 5, closing is 0, closing is 0. And here is the middle part is credit purchase. So credit purchase, total purchase is 15 and credit purchase. So 30% purchase were in credit. So my if my total purchase is 15, then my 30% of 30% of this 4.5 is my credit purchase. If I know this and this, so my x will be 9.5. If this is 9.5, this is 0, then cash purchase is 9.5. Easy. Okay. Then the opening AR is my 25 lakhs. Credit sales, uh, sales is 25% are in cash, and total sale is 20. So if 20 is total and 25 is cash, then 75 is credit. So 20, 20 lakhs 75% is 15 lakhs is my credit, and my 15, this should be 40, and this should be 30 cash received. So let's give the answer from this equation. My cash sales is 5, because my total sale is 20 and 15 is credit. 75, 5% is 15 is the credit from the total, so 5 is my cash sales. 5 is my cash sales, and cash received cash received from AR. Cash received from the AR is 30. So my 35 is my cash received from the customer, and cash paid to the supplier. Next is the cash purchase. Cash purchase is total purchase is 15, 30% is on credit, so 4.5 is credit. So it might minus 10.5, minus 10.5 is my own credit, cash. And then my cash paid for the AP is 9.5. Here is the cash purchase, 9.5 minus 9.5. So my minus total minus 20 is paid to the supplier. So this is the first example. You can solve by this type of question by inverted y. Let's practice the another one. Here is ask find the cash paid to the taxes, interest, and salary. So let's do. Opening tax 5 is 5 lakhs. Tax payable is 5. Tax expense is increased by 3. So my x will be 8. Then my closing tax payable is 5.5. 5.5. Then I can get the cash paid is 2.5 by this 8. 2.5. 2.5 plus 5.5 is 8. Next is the opening interest payable. Opening interest payable is 40k. 40k is my 40k is my tax payable. Interest payable. Expense is 30k. This comes to the 80k, and my closing interest payable is 0. If this is 0, this should be 80k. Okay. Then the outstanding salary is 1 lakhs. My closing outstanding salary is 1.5, and my salary expense is 80k, and this is 1.8. If this is 1.8, this is 1.5, this should be 0.2. 0.2 is 0.3. 30k. Okay. So this is the cash paid to the salaries 30k, interest is 80k, and 2.5 lakhs for the taxes. So this is this type of example you will get in the CFA main exam. So just practice, and if you have not understood, please revise these questions and practice some of by your own. So let's talk about the difference between US GAAP and IFRS rules regarding this cash flow. So in the US GAAP, if you have received the interest, you need to show in the cash flow from operations. But IFRS gives some uh, independence to show in the CFO or CFI. Same for the interest paid, CFO or CFI. Dividend received, CFO plus CFI. Dividend paid, you need to show in the cash flow from financing activity. You can show in the operation or the financing activity. Bank overdraft treated as a balance sheet debt, and this is treated as balance sheet cash. Bank overdraft. Taxes is the in the CFO. You may be split in the CFO, CFF, or CFI based on the nature. Taxes based on the nature. Presentation of the CFO: direct preferred, but indirect allowed. And in the IFRS, indirect allowed, but RICO as direct must be disclosed in the footnote. So as I have told in the first part that where is this, that if company is using indirect method, they must also disclose the direct method in the footnote under the IFRS. Not mandatory in the US GAAP, but IFRS requires the direct method in the footnote if you are using indirect method of the cash flow. So to understand the indirect, if you know the direct method, it's okay. If you have not, please visit my part 1 of this cash flow statement series. Okay. So let's talk about the another thing called free cash flow. So here is the two part: free cash flow to the firm and free cash flow to the equity. So first thing first, what is the free cash flow? So free cash flow represent the cash available after a company has paid for its capex and general expenses to maintain and expand its business. Means what the cash debt holders and equity holders received after the company's basic overall finance operation expenses and the capex expenses of the cash. So the first is the free cash flow to the firm. Firm means FCFF is cash available to all investors, both debt and equity holders, after covering all the operating expenses and investments. So the formula of the FCFF is NOPAT. NOPAT means net operating profit after tax plus DNA. DNA means depreciation and amortization minus capex minus change in working capital. Or you can use another formula called CFO, cash flow from operation, plus interest expense 1 minus tax rate minus capex. Okay, so here is the example. Capex is subtracted because the cash outflow for the business growth, and change in working capital adjustment for the short term adjustment and liability. And we will do the example after discussing the another method also. So the use cases of the FCFF is used for the DCF valuation, discounted cash flow valuation, to determine the firm's total value. It is used to determine the firm's total value. And the positives FCFF means the company generates enough cash to reinvest or reduce the debt. And the negative FCFF means the company might be relying on the external financing. Okay, then comes to the second part, free cash flow to the equity. FCFE represent the cash available to equity shareholders after debt and obligations are met. Means this is only for the cash only available for the equity, and this form is available for the debt holders and equity holders. So the free cash flow to equity formula is the FCFF minus net debt payment. Because if you this cash is for the both debt and equity, minus if you subtract the debt payment, you will get the FCFE, free cash flow to the equity holders. So another method is another formula is also CFO minus capex plus net borrowing. Net borrowings means new loan taken minus old loan paid. So we subtract the debt repayment and add new borrowing, because FCF is the cash available only to the equity holders after paying the debt. So if debt is paid, so it should be minus, or if new debt is taken, it should be added. Okay, so if a company borrows more, FCF will increase, because if borrows more, if company borrows more, then it should be increased in the FCFE formula, and if it pays, it should be decreased, so it will decrease the FCFE. The use cases of the free cash flow to the equity is used to value the equity, and this FCFF is used for the total firm valuation, and this is only for the equity in the market. So a positive FCFE means the company can pay dividend or reinvest. A negative FCFE may indicate the reliance on the debt or equity issuance. So let's do the example. For example, my company's EBIT is 1 lakh, tax rate is 30%, depreciation is 10,000, capex is 20, change in working capital is 5, and my net borrowing, new loan minus loan repayment is 1500. So I have raised a new loan of 15, means not a new loan, but a difference of the old loan payable and new loan payable. For example, this could be explained here is my 20,000 is new loan and my 5,000 is old loan paid. So if this is the total of 15,000. Okay, so my FCFA formula is EBITDA minus 1 minus taxes and plus depreciation minus capex plus working capital plus minus working capital changes, minus working capital changes. So my 10 lakhs is my EBITDA. EBITDA is 10 lakh minus 30%, 80, minus 1 minus 30 plus depreciation minus capex minus 5,000. So my FCFF becomes the 55,000 free cash flow to the firm. Then the FCFE is FCFF plus net borrowings minus interest payment 1 minus tax rate. So 55,000 plus 15,000. My net borrowings 15,000. I have not paid any interest, so 55 plus 15 is 70,000 is the FCFE. So that's it. This is the basic understanding, and we conclude the cash flow from uh, cash flow statement explanation. Thank you for listening. If you have any suggestion or query, please leave a comment below. And uh, if you like the video, please like and subscribe to the channel, because I am gonna make the all the CFA level 1 topic videos um, on a regular basis. And